Hi, my name's Andrew Masters, an analyst from FIBO Group, and in this video, we'll talk about double candlestick patterns. The Japanese candlestick analysis also contains such terms as body strengths, shadows, strength of denial. Let's look at these three pillars of a candlestick analysis. So the body strength. The longer the body, the higher the probability of movement in the direction that was chosen. The shadow strength. The shorter the shadow, the higher the probability of the movement in the direction of a short shadow. Think upon our tailed candlesticks. The price goes towards the short shadow. The strength of denial. If the price did not go in the expected direction, it is most likely to go in the opposite direction. There is no 100% probability in the Forex market. That is why, if the price did not go in the expected direction, it's a sign that it will go in the opposite direction. Everything is quite trivial. Please pay attention to the screen. We can observe the intersection of a level and trend line in the chart, and we feel confident that the candlestick pattern that is formed in this area will be a reversal. We can see a tailed candlestick, the shadow of which reached the intersection point. We understand that it's a strong candlestick pattern, and that is why we can immediately open a position without waiting for additional candlesticks. We see our prediction for reversal was justified and the price really began to move down. Now, let's move on to the next example, a daily chart of gold. It seems that the price moves chaotically, but let's apply the FIBO levels so the situation becomes clearer. Now we just need to find the reversal candlestick patterns that will explain its behaviour. Let's try to predict the future price movement with the help of FIBO levels. We can see how the price reaches the FIBO level, consolidates, forms tweezers, and returns and moves down. After the price consolidates near the FIBO level again, we can observe accumulation of doji and tweezers. It confirms how important this level is. It's important to remember that if the price returned from the level, it's more likely to move in the direction of the return. If it broke through the level, it will move in the direction of the breakthrough. If we look at the price chart with a fresh pair of eyes, we'll notice that it's a symmetrical triangle. We know that to break it through, the price will have to move a distance of its maximum width, and it so happened. This is an integrated approach to use the graphical analysis in order to determine the market reversal time and determine the possible targets for the price. In the next video, we'll study basic principles of the technical analysis.